Great guys, how we all doing? I hope we are all good. So I'm back with chapter 2 of the book Market Structure and Powerful Setups by WadeFX. So without wasting much of the time, recap of what we read on chapter 1. It was just the basics. So we mainly touched on the Fibonacci, understanding the break of market structure and using the fib to get our entries. So chapter 2 is all about market structure. So before we get started with chapter 2, I wanted to show you a quick trade which I took just based off the basics. Okay, I'm going to pause. I believe my screen is being shared, so I hope you guys are seeing this. So this was a German 40 trade which we took on the 29th of April. So what I'm just going to highlight on this particular chart would be okay. Unfortunately, the pen, I cannot grab the pen here. Where's the pen? Where's the pen? Is this chart even sharing? Let's see. Okay, okay. You are screen sharing. All right. Okay, let me see if I can grab the pen and use it. Still can't, but anyways, no worries. Let me just try to narrate. I hope you can see the cursor on my screen. So don't confuse the cursor on the video because I was actually explaining something else here. So what you see from where the day started, our price was bullish. So we had a very huge expansion to the top side. Then price retraced coming into New York session, which is my trading session. So during New York session, I did not execute anything, which is this orange space you see. I actually executed my trade in the evening, which was New York PM session. So what you see here, I just highlighted that I had a trend. That's the first thing. Second thing is if I click play, let's see if you will be able to see me moving the cursor here. All right, all right. Okay, so you can see me highlighting point A and point B. This is the level I used to run my fib. So that's the expansion move which I used to take my trade. You can see me pinpointing the retracement. If you notice, we retraced into the 38.2 fib retracement level. Then because I used moving averages, I had to wait for a close above the 13 so that I could take my trade. Here you see me highlighting the BMS or the break of market structures. This was the range low and my range high at the top here just before I entered. And this was the actual running trade. You can see the entry. My entries are usually on the 5 minute or on the 3 minute. So this was the actual trade. So before we even go anywhere with the book, I just wanted to show you that if you are a trader and you understand what's going on with price, as long as you understand this and you understand that you are in a trend, it becomes a little bit more easier to be able to execute your trades because the only thing you're waiting for is for price to retrace into the OTE, whereby you need to have a checklist of the reasons which you need to see or confluences you need to see before you actually execute the trade. So just by chapter 1, quick example of a trade we took, which was actually a win. So without wasting much time, we're jumping into today's chapter, which is chapter 2, market structure. The price can simply be found in one of the three phases below, which is consolidation, uptrend, or downtrend. So what is a consolidation? Consolidation usually happens if price gives an impulsive move. Consolidation is usually like a sideways move or a certain period in time whereby your price is not giving you any trend. Then an uptrend will then continue, or a downtrend. So if it's a downtrend, you get price coming down, then at some point price will go sideways. That sideways move or that time when price is not setting any higher highs or any lower lows, that's when your price is actually consolidating. So it's just a phase in the market. So we've got consolidation, we've got an uptrend, we've got a downtrend. All these were described in the first chapter. So market structure in bullish conditions, vice versa for bearish conditions. So whatever we're explaining on this chapter, uh, If you are looking for a bearish move, you just use the opposite of this. I'll see if we've got time. I'll try to show you an example because I don't believe the author showed an example of a bearish condition. All right. So a bullish market is characterized by making higher highs and higher lows. But this characterization is not enough. It is necessary to say that bullish markets are always breaking swing highs and respecting the swing lows. The fact that the price is broken a swing high indicates higher prices should be expected. So it is negotiated in the trend in which the market structure was broken. So basically, this is an illustration of a bullish market structure. These are the swing highs which the author is referring to. So each time your price is coming up after that expansion move with that range low, range high, price will also retrace. And if you break a structure here, that's a sign that you are in an uptrend. So you get a new expansion here, you get a new range low, you get a new range high. So when the author is saying swing highs are being broken, it means these swings where price is turning to give that retracement, those are the swing highs which the author is just referring to. All right. So the price is breaking the highs only. After a break of market structure, the price retracts or retraces or pulls back to 50% OTE of the Fibonacci levels, which becomes a low risk buy. So each time a price is moving, once we break a structure, BMS, we are anticipating now to run our fib from the range low to wherever the price starts to retrace from, which becomes your range high, right? So once you run your fib, the OTE areas will be somewhere in there. But bear in mind that sometimes price will just bounce off the broken swing high or that level which would have been broken. So it might find support right here and still push up without jumping or going into your OTE areas. That's just something which you need to take note of, right? All right. So market structure in bullish conditions. So this is the actual illustration of a bullish move. So we have our first break of market structure right here by this move. So as a trader, if you see a structure being broken, the next thing you're looking for, you don't want to buy right here. You want to allow price to retrace, right? So you want to mark the lowest low where your price started to the highest high before the retracement started to form. So if you see that you got a nice break of structure here, it's simply showing you that the probabilities of this price now starting to be in an uptrend become high. All right, so now what do you wait for? Of course, after running your fib from point A to point B, you are now waiting for price to retrace into your OTE areas. So as the price is retracing, if it respects the OTE areas with other confluences, then you can take a low risk buy. So as your trend continues, the only thing you're trying to do is to trend in the direction of the break of market structure and to just be patient to allow for the price to retrace. There is ways which you can use to enter into this trade if you see it's a bit late, because sometimes you come to the charts and price is already taken off from your low risk buy area or your OTE area. There are ways which you can use to get into the trade, but that's something which I'll teach in another video, but I'll try to explain it when we get into the actual charts as well. So clean illustration of an uptrend. Price keeps breaking these swing highs, clean retracements, low risk buys, and so on and so on. So until price fails to break a high, the trend will continue being bullish. Okay. So here's another illustration again, whereby price now reverses. So price was coming up until we got to this higher high right here. So once we go to this higher high, price now broke a structure to the downside. This is the first sign that you are about to get a reversal. That's the first sign, a reversal. Okay, that's an S. So the next sign you need to see that you are now in a reversal market structure, or the trend is changing to sales. What you want to see is price pushing back up but failing to take this high. So that leads us to a what? An SMS, which is chapter 1, what we read, SMS, or a failed swing. Once you get a failed swing, it's now confirmation that your price is most likely going to change the trend. So soon as you start getting another break of structure to the downside, then you can trade in that direction until you see price showing you something different. So within a higher time frame, so let's say we are on the 4 hour and price is pushing down. Within this push down, or within the retracement, which is coming back into the OTEs here, you might get a smaller trend forming within the retracement. So let me see that again in case you guys didn't quite get it. So let's say your price is pushed down, and this is the retracement. Within this retracement, you can get smaller higher highs, higher lows, or a smaller trend, smaller BMS happening within that area, which means you can still be able to take your buys as long as you understand what this thing is doing, which is your market structure. So, okay, chapter 3. So without wasting much time, we're going to jump into the charts. All right, so for this example, again, I'm going to look at GU, and we're just going to look at the current market price, which we are looking at right now on the charts. So if you look at this highest high we have, we do agree that before that highest high, we had an uptrend happening with a strong acceleration happening here. Retracement, high. Then we had this first push, which broke the structure here. So we got our first BMS. So let me see if I can actually write it on the screen. Okay, so we had a BMS right there. This level being broken, that's our BMS. But we don't know that it's a reversal until price fails to break this high, so that we get a failed swing or an SMS. So price retraces up, comes up, we get our SMS or our failed swing. Then from there, we are now looking for the next BMS to happen. So the next BMS was the break of this level here. From here now, we are actively looking for sells. So here we got our sell. You could have run a fib from this high to this low here, which is the lowest low, of course. So a fib retracement, you could have taken a sell here. This price goes sideways here, which is a bit of a consolidation, but we continue coming down. So we just consider this one expansion move. Then price retraces up, but we fail to take this high, which means the trend is not going up. So as long as there's no break of structure with a clean close above, that's a failed push up. So the downtrend is simply going to continue. So if you run your fib from point A to point B, this is now an example whereby when you run your fib, price reacts outside of that fib. So if you run your fib from this high to this low, range high, range low, we just drag it into the future for that same week. You will notice that, okay, this is the 2nd to the 5th of September. I want to zoom in so that these candles can be bigger. All right, there we go. So if you notice, we are marking this as our expansion, right? So we drag our fib 2 into the future to the end of that week. So as price was retracing into our OTE right here, there was no reaction right there, right? We had no reaction at all. So this is an example which you as a trader is to just know and understand that, okay, sometimes you might not get a reaction. As much as you are in a downtrend, you're running your fib from here to here, sometimes price will extend outside your OTE area. All right, so that's another market condition which I think the author explains this in the next chapter, which is liquidity. So this is an example whereby we get a liquidity sweep. So this is going to lead us into the next chapter, right? So like I said, what the author is teaching are tools which you need to use as a trader to be able to come up with the best low risk trades. So if there's no sales in your OTE, it doesn't necessarily mean that a trade is not coming. A trade might still come, as you see here, but you'll be using a different set of tools to be able to come up with your entry. And that tool in this example was not a Fibonacci retracement tool. So this is something which you just need to know as a trader. Nothing works 100%. Each market condition has got certain things which you need to use to be able to come up with a setup. All right, so our downtrend continues all the way until we get to this lowest low here, right? From here, price retraces a bit, but now we fail to take out this low. Soon as we fail to take out this low, what happens? We get a BMS right here. Soon as we get a BMS, what are we looking for? We are looking for a retracement into OTE areas so that we can get a buy. So let's run a fib from this low to this high. If you notice again, price did not retrace into any of the OTE areas. This is also an example whereby now price is bouncing off the BMS. They actually found support here. So as a trader, as much as you're waiting for price to retrace, there might be another confluence which might trigger an entry or a setup before you get into your OTE. So that could also be a lesson on its own. Anyways, the trend changes, which is the main thing I just wanted to highlight, that your trend now changes into a buy motion. So now you see price starts to push up, higher highs, higher lows, a bit of a sideways move here, continues up, just like that. So the main thing you're looking for on your charts is to understand the market structure. If your price is coming up, you should be able to see the BMS or the break in that structure for you to keep looking for low risk buys, right? If the market is coming down, you are looking for BMS in the direction of the trend, another BMS here, so that you can look for OTE areas to get the high probability sells. Then if your price is going sideways, which is the consolidation, you are looking forward to do nothing on that particular price action. You might have a whole week of consolidation, which means that whole week you're not trading. You might have a whole month of consolidation, which means that whole month you won't be trading. So in terms of market structure, it's always good to look at it from a higher time frame perspective. So you want to look at your market structure from the 4-hour. But if you are now well versed, or if you're used, or if you understand market structure as a whole, you can now even look for it maybe on the H1. But I would say try to use your higher time frames like H1, H4, even the daily, to get a good read of where your price is going. Always remember the higher time frames carry more weight when it comes to trading. So identify market structure on a higher time frame, then you can now do top-down analysis and look for your entry patterns or your entry triggers on a smaller time frame for a minimized risk and a higher reward. So that's it for chapter 2. When we come back, we're going to be looking at chapter 3, which is liquidity. This is one of the best thing you need to know as a trader. So do not miss out on this. So make sure your notifications are turned on so that when this video drops, you can quickly watch it. So just a quick recap of today's chapter. We were on chapter 2. We're simply talking about market structure, understanding that there's like 3 things which you can be able to visibly see on your charts: either a consolidating market, an uptrending market, or a downtrending market. Soon as you identify a trend, it now becomes a little bit easier for you to come up with a setup. So on the actual charts, I showed you an example of a sell and I showed you an example of a buy. So thank you so much for watching. Let me know what you took or what lesson you took from this chapter. Let me know if you are applying these concepts in your trading as well. Let me know if you took any trades, where they wins, where they losses. So let's catch up on the next session when we go through chapter 3. If you want to get in touch with the author of the book, before I forget, special shout out to WadeFX. So if you want to follow the author of the book directly, you can just go to Twitter or X and you can search for WadeFX setups. If you want to follow him on IG, this is his handle at Wade_FX_setups. Then if you want to follow him on his Telegram channel, I'll also drop this link in the description. So for those who haven't watched the first chapter, I'll also drop a link to our session when we went through the first chapter, which was the basics. So apart from that, thank you so much, guys, for watching until the end. Make sure you subscribe, share with your trading friends, and comment what you think or feel about this book. Enjoy the rest of your day. Good trading.